And welcome back to another Startup Junkies podcast. Thank you guys for tuning in, whether you're watching or listening, however you may be tuning in with us. We appreciate it. Be sure to like, subscribe, and check in with the Startup Junkie crew weekly. We appreciate it. My name is McEntire. I'm joined today by my co-host, Jeff Ameriine. Jeff, how you doing?
Pretty good. Happy it's Friday.
Yes, finally Friday, right? Feels good. Well, I am honored to introduce our guest for the podcast today. His name is Nathan Beckord. He is the founder and CEO of Foundersuite, a company that brings structure, speed, efficiency to capital raising and investor relations for startups. Nathan, how are you doing today?
Very good. Very good. Happy Friday.
Happy Friday. Awesome. Yeah. Well, if you don't mind, can you give us just a little bit of your background story or as we like to say, your origin story?
Origin story. Yep. So I'm originally from Colorado. I grew up there and had fun out there. And then for college, went out to school in Santa Clara University, which is out in Silicon Valley, and kind of got a little intro to, the startup world, the Silicon Valley world, and got pretty excited about that. But then after graduating, went off and did some investment banking, and did that for a few years, worked at Piper Jaffray and JP Morgan, and was basically helping companies raise later stage rounds of capital, B round, C round, mezzanine rounds, pipes. Even did a little work during this is going to date me, but the first .com bubble, on taking some companies public and stuff like that, which was all really exciting. And like that, but really had, and got an exposure to working with startups, and that was fun, but really wanted to start my own startup, like a lot of people do who catch the startup bug. And, but I just didn't have any good ideas. So I kept kind of helping companies raise capital for 15 years, something like that, working with a couple hundred companies, helping them raise their rounds. And then finally had this idea, why don't I build some software for raising capital? And we did that starting 7 years ago or something like that. So we've been at that ever since. So that's kind of the short little history of how we got to where we are today.
Well, that's a good segue to Foundersuite. Talk about what you guys do and the sort of friction points you address in the process of raising capital.
Yeah. So back when I was helping companies raise capital as a consultant, we'd get you on as a startup customer of ours. We'd help you shape your pitch deck, put together a financial model, and then we'd go out and spend sometimes 50 or 100 hours researching investors and building a target list of investors. And then we load it all up into this fancy Google spreadsheet or Excel spreadsheet. And, you use that to track all your investor communications. And that was fine. But then we had this idea, like, let's actually build software to make that process better, right? And so our first product we launched 6 years ago is an investor CRM, which is a tool to manage a pipeline of investors, right? All the activities and files and conversations and to-dos and tasks and email threads, all that stuff, you use that to manage. So that was our first product, investor CRM. And then since then, we've just been adding like 1 or 2 products a year. We added a database of investors that we're now up to about 200,000 investors in our database. We have a pitch deck hosting tool, investor update tool, email follow-up tools, a collection of documents like pitch decks and term sheets and cap tables you can download. And most recently, we added a virtual data room for sharing your confidential materials with investors and tracking who viewed it. So that's kind of been the evolution. It's been pretty kind of one foot in front of the other, just grinding away, adding more features that people need for their fundraising journey, basically.
And your business model is a subscription? Is it subscription based?
Yep, simply as a SaaS model, simply a monthly subscription fee of $0, $49 or $69 a month, depending on a few feature sets. So pretty simple.
Have you got a product that's helpful for fund managers as well, that helps them raise money into a fund, or are you targeting primarily entrepreneurs?
So glad you asked. That's a good segue. We've been serving startups since day one. In the past, call it 18 months or so, we actually have released a version of the product for non-startup customers. And that includes VCs and emerging venture funds who are raising capital from LPs. So we've added about 7,000 LPs to our database, and you can use the product to manage that pipeline if you're raising a fund. And then we also added a version for what I call intermediaries, like investment bankers, consultants, broker dealers, people who are working with other startups and helping them raise capital. So yeah, we've kind of branched out a little bit from the startups, but startups are still our core base.
Gotcha. Well, that's interesting. And given all the activity you see, the entrepreneurs, and the fact that you've been on all sides of the table, where do you think valuations are headed for the tech sector in particular? It seems like they're in a process of having a bit of a beat down. Is that going to filter down to the earlier rounds as well?
That's a great question.
Yeah, it definitely will. And we are starting to see it. I'm hearing anecdotal stuff. I don't know if we have, Q1 is actually, I just reading something earlier today. Q1 of 2022 was actually like one of the most robust quarters in history ever. But a lot of that is still the deals that a lot of that's the deals that were being done in Q4, right? In December and stuff like that. They're kind of closing in Q1. So what are we in here? March, April, May, we're in end of Q2, and we'll see what happens. I think probably we'll see some effects of that sort of valuation pressure this quarter and next quarter. Now, how severe that's going to be, hard to say, but I don't know. You start to hear I've been around the block a few times, and you hear these things of like, oh, the sky is falling, the winter is coming. I've heard these phrases multiple times over the years, and obviously we heard that right when the pandemic started happening.
Sure.
Things did get crushed, and then they bounced back 6 months later. So it's kind of hard to predict exactly, right?
It still seems kind of frothy around the whole Web3 blockchain NFT space right now, and to me, and I've been around the block a few times too. It's very reminiscent of about 1994 or 95 in that arena. And I don't know if you have similar opinions about where all that stuff is going. I'd be curious in your thoughts.
It is the hot segment at the moment, sure. So, but there's always a new hot segment, right? I mean, every 6 months there's a new hot segment, whether it's NFTs or crypto or not even that long ago, maybe a year ago, it was kind of work. What was the phrase? Work, the new mode of work, right? All these startups like Zoom and others that were dealing with how people are working, right? I mean, there's a new trendy thing every 6 months. So, but yeah, Web3 is a buzzy term, and it's sort of a meaningless term, right? Because
Exactly.
really, there's a lot of stuff that is folded into that bucket.
That's exactly right.
Yeah. So,
just to follow up on that, how many startups are you seeing out especially in the Bay Area, kind of follow that, or do you have something to do with Web3 or these helium
blockchain, NFT?
Yeah, I don't know, like on our customer base, which is about 3,000 monthly active startups. I don't know what portion are Web3 because we don't actually ask that when you sign up. Yeah. So I don't have real visibility into that. I think I saw, again, don't quote me on this, but I read also recently that something like 11% of recent deals were titled Web3, which is, a healthy portion. So there's a data point for you.
It's interesting. Yeah.
Do you have some case studies for the sort of benefits that your clients have seen with Foundersuite? I mean, is it shortening the amount of time, or are you attacking the cycles that it takes to actually get a raise done, or just the overall efficiency? How would you characterize? I mean, I know it's comprehensive, but what are the main things that people say, gee, this really helped us do X or Y?
Yeah, it is a few things, frankly. I mean, I like to tell founders, there's a right way, a couple right ways, and 1,000 wrong ways to raise capital. We're trying to build these tools like the bumpers at the bowling lane that kind of keep you on the right right lane. But what's the real value prop? For some people, it's the database of investors that helps them find and identify the right folks. For other people, it's really having like a CRM and running a pretty efficient process, because there's I believe there's a strong corollary between the speed at which your fundraising is going and the likelihood you are to actually be successful. And so, if you're not running an efficient, streamlined, tight process, then things are often slowing down, getting sluggish, getting stale, and your deal dies, right? So for some people, just that organizational structure is really what they need to help run a process, get the momentum going on their round. And then I guess last but definitely not least, we have tools like the investor update tool that help you build and nurture relationships with investors. So, we see that where founders are reaching out to investors even months in advance of fundraising, engaging with them in a dialogue, keeping them updated with their monthly progress reports. And then it's really nurturing that relationship. So when they actually pull the trigger and say, all right, we're raising capital now, they've already kind of warmed up 50 investors who are ready to go. And that's really powerful too, if you can do that. So kind of depends on your startup, but obviously if you squish all three of those things together, then you really have a lot of power.
Well, I'll tell you, there's, aside from just the acumen of the team itself, the two things I always judge an investment on are, can they sell customers and can they sell investors, and what's the evidence? And if they bring the same sort of efficiency to raising money that they do to their sales process, it tends to give you confidence. We're always early players, seed to Series A, and you're really, your role is to set them up for the later stages. And if they struggled getting those initial steps done, they're going to struggle mightily all the way along. So it's really interesting. Now, I mean, it's great what you guys are doing, for sure.
Keep up to date on the latest news in economic development with the Arkansas Economic Development Commission's Arkansas Inc. newsletter. Each month, get the Arkansas Inc. newsletter, which spotlights the latest project wins and developments throughout the state, delivered to your email. The newsletter features major project announcements, company expansions and relocations, news articles, rankings, and more that highlight why Arkansas is a great state to do business. The newsletter is a snapshot of what AEDC has been working on and what we are following. The Quarterly Tech Trends newsletter highlights the latest news in Arkansas's growing tech sector. You can learn about new Arkansas tech companies, computer science and cybersecurity initiatives, funding and venture capital announcements, and even more. AEDC offers 4 quarterly newsletters: the Food and Beverage Industry Digest, Aerospace and Defense Beacon, Timber Trends, and Tech Trends. To learn more or sign up for a newsletter, visit arkansasedc.com/news.
I think there's I say this all the time, founders, fundraising is a sales process, right? It's a sales process that you can kind of run it like a process. You're building a list of leads, engaging with them, nurturing those leads, ultimately driving them towards a decision, right? And so that's kind of the definition of a sales process, and that's what fundraising is too.
No doubt. And the third leg of that stool is, if you think it's always a war competing for investment, it's a war competing for customers. It's now a war competing for talent as well, and they've got to approach talent acquisition exactly the same way. It's amazing how tough it is to find and keep and retain great people.
Yeah, and I'm sure there are. I feel like I've seen kind of like analogous startups out there to do this. I'm sure there must be out there, right? Kind of how to build a talent pipeline and really do that. There should be, if there isn't. That's a business idea if it's not out there.
Yeah, 100%. Davis, I'm occupying all the airtime, as I often do. Take it back over.
You're good. You've always got the hard-hitting questions. I just want to talk a touch on that investor CRM, and that kind of more specifically, like the investor database y'all have accumulated over the years. How's that kind of come to be? Is that all kind of relational, and it's just built on itself over the years, or if you want to touch on that?
It's the corny joke I make is it's like making sausage. The end product's great. The goings into it are something you really don't want to see. No, it's been a bit of a messy process creating an investor database. We actually, when we first launched, we had a plugin to AngelList database. They had an API, which was great, but then they decided to no longer support an API. They killed it off. So we had to, oh crap, we've got to build our own. So anyway, we kind of, the database as it stands today, 200,000 investors. We've purchased some data sets. There was a recruiter, private equity recruiter that was retiring. We bought his whole database of thousands of investors. We've done some automated data gathering, spidering and stuff like that. We've had teams of MBA interns going manually, page by page, gathering stuff, copying and pasting 10,000 times. And then we don't, like, if you're a founder and come on and you upload your spreadsheet of investors, we don't take that data. That's private to you, but we do have a way now where founders can add like reviews and tips on investors. So we're kind of gathering some data from our users.
A little Glassdoor action there. That's a good idea. I like it.
Yeah, we're really, and Glassdoor is actually the perfect metaphor because we're really trying to make it where you're helping other founders. Like, oh, hey, I just met with these guys. They really are focused on your metrics or your numbers or your team, whatever it is, right? Here's what to emphasize, right? Where we're kind of gleaning some of that information from founders to help the broader founder community. Yeah.
Mm-hmm. Mm-hmm.
One of the questions that I'm sure all of your clients are pressed with as they go through this is, why are they building what they're building, and what's the kind of the end game? And there's, it's kind of a dual-edged sword. Whenever people get too quickly to I'm building it to sell or building it to exit, then you automatically piss off half the investors you talk to.
Sure.
That think your motives are wrong. And then the other half are like, well, wait a minute, I'm not signing up for this for 20 years. You got to have aligned objectives. So I'm going to ask you that completely unfair question as well. What's the end game look like for you? Are you building to get bought, or are you building it just because you love what you're doing and you want to see how big you can make it?
It's a totally good question. I don't know if you're going to like my answer because I don't really have a good answer, or I haven't thoughtfully prepared an answer around that. I mean, I built this because I really wanted to be a founder, and I knew fundraising. I've been doing that forever. That's like the one thing I really know deeply. So that's kind of why we started to build this. Now, we get people sniffing around. I usually like junior folks kind of sniffing around, fishing basically. Hey, are you guys looking to sell or get acquired? So I mean, every now and then I'll entertain a few of those calls just to see what's going on. This market is really starting to blossom. We were maybe a little bit early to it. We've been around 6 years, and now I'm starting to see like similar companies, clones, competitors popping up every 2 months, so it's sort of like this market is starting to bubble. And there are at least half a dozen pretty larger companies I can think of that we could be a good fit for. So I'm not really thinking about that, but it's maybe in the back of the mind somewhere.
Just keep running a great company and the things kind of sort themselves out, right?
That's the thing. I mean, and you hear people say that, like, great companies are bought, not sold, right?
Sure.
Meaning, focus on building a great company and someone will buy you. If you're focused on like selling your company, you're going to get lower returns. So
absolutely. It makes sense.
No, it does. Yeah, absolutely.
My investors we do have investors. And so they do, it has been, to be totally candid, probably a longer journey than they wanted originally, right? Because
Sure.
we're in year 6 now.
Well, and for those of us that can remember the late 90s and the early 2000s, it wasn't unreasonable for tech platforms to have this pathway to a public offering. And then Sarbanes-Oxley came, and now it's like IPOs have had their moments, but it's still kind of an outlier exit strategy as much as anything else. So what I always tell people when we're raising a fund or when they're going into fundraising is you put your money in, and it's going to be 5 to 15 years before you start to see any kind of returns at all. And if you occasionally get an early exit, that's a statistical outlier. That's not the norm, because it's different market than what it was. And particularly where we are in the heartland, there's not the same level of cycling of deals and of exits as what you'd get on either of the coast. But yeah, it's a fun game. I mean, I love all aspects of it. I enjoyed being an operator. the 9 times that I did it, but I kind of enjoy being on the entrepreneurial support organization and investor side of it more at this point. Maybe it's just because I've had, I've had the hell beat out of me for a bunch of years. I'm not sure.
It is a fulfilling side to be on that.
Yeah.
Being that support, especially as a Startup Junkie, it's very rewarding, right?
A lot of fun.
Mm-hmm.
Yeah, it's brutal. I aged rapidly. We're at a nice, healthy place now, but the first couple of years are really tough. Like
aging dog years, right?
Aging dog years, exactly. Yes, it's very true. Yep. And we could go off on a whole tangent about all that stuff, like, just keeping the ship afloat when you have holes in the boat and storms coming and, all that stuff too.
Yeah. I mean, so somebody asked me once upon a time, so I've got kids and grandkids, and they said, well, what's the difference between kids and grandkids? And I said, well, I'll give you an entrepreneurship and an investor analogy. I said, kids are like a startup. They're on you 365, 24/7. You can't get away from them. They're there all the time. That's a lot like a startup. It is on your mind every minute of the day, including when you sleep.
Yeah.
Grandkids are like an investment. You go visit them, you play with them, you sugar them up, and then you leave them with somebody else, and it's ultimately their problem. And you can go about your business. And it's really true. It really is true that the difference is between that being an operator.
The perfect metaphor. I might borrow that.
Well, one of the things that we like to ask, Nathan, when and particularly with people that have had so much a breadth of experiences, if you could roll that clock back 20 years and take the wisdom that you have now as an operator, as somebody that has helped raise money and investment activity, what would you, if you can go back in that time machine, what would you tell your younger self back in 2001, 2002, or whatever the right time frame is?
I think I guess there's two things. Like, I think it helped that I had spent time doing investment banking. I really learned kind of a trade, so to speak. I learned how to do something. I knew the ins and outs, the pain points of that thing, and I was able to build, software company around that. So that was good. I think the thing I would maybe do differently is, maybe after spending a little time in investment banking, I would have gone off and tried to get a job at like a high scaling startup, a startup that's just going from employee number 20 to 200 quickly, right? And those are hard. You can't always figure out which ones are going to do that, right? I mean, some challenge, but really trying to get that experience for 2 years of working on a extreme rocket ship, startup, no matter what the position is, just to sort of be in there and watching how all the systems come together, and you layer on management and recruiting and all that stuff. So, because I had to learn a lot of stuff the hard way, just trial and error, made lots of mistakes, a lot of dumb stuff that cost us money and time in the first couple rocky years before we sort of figured stuff out. So I think that would be my advice to my younger self: get a job, whatever it is, wash dishes, sweep the floors, it doesn't matter what it is, just get in the door at something that's on the rocket ship path.
Yeah, that's great. That's great advice. It's great advice. And so for our listeners in the audience, if they want to find out more about Foundersuite or yourself, what's the best way for them to do that?
Sure. I'm pretty connect with me on LinkedIn, maybe mention you saw the Startup Junkies podcast and just mention that so I know who you are, because I get tons and tons of invites, but love to connect on LinkedIn. We put out a lot of, once or twice a week, we put out pretty good deep posts on here's a, sample term sheet and all its explanations, or here's a list of Web 3.0 investors, or whatever it is. Putting out a lot of good quality content on LinkedIn. So happy to connect on there. And then, on the socials, we're just Twitter at Foundersuite, Facebook at Foundersuite, Instagram, all that good stuff. And then, of course, foundersuite.com is the platform. The one other thing I would maybe just quickly plug is we have a YouTube channel and a podcast of our own called How I Raised It, which is just interviews with other founders, literally how they raise capital. And it's a very niche topic, but we really go deep into it. And there's just some incredible like stories, inspirational stories, and really just tactical stuff, like really good tactical stuff. Like here's how to run a VC meeting minute by minute, or here's how to, do XYZ. So
Excellent.
check that out.
Hey, awesome. Thanks for what you do. I mean, it's the stats on raising money are not in your favor. I think I joke plenty of times that it's easier to get into Harvard than actually raise institutional VC. And so having the kind of tools that you guys offer is really a great service to the founders. Thank you for what you do.
Thank you. Well, thanks for saying that, and thanks for having me on the show.
You bet. We'll see you soon. Take it easy.
Okay. Thanks, guys.
Right. You bet.
Absolutely. Have a good one.
Ecosystem builders, entrepreneurs, chambers of commerce, mayors. If you're interested in taking your economic future into your own hands, we've got a book that can help you. Creating Startup Junkies, Building Sustainable Venture Ecosystems in Unexpected Places is the guide. It's a little bit inspiration. It's a little bit toolkit. What it will allow you to do is take your economic future into your own hands and build a sustainable small business, innovation, and entrepreneurial ecosystem in your backyard. If you'd like to hear more, check out creatingstartupjunkies.com. The Startup Junkie podcast reaches over 100 countries and has had over 100,000 downloads. If you're interested in reaching some of the most motivated and engaged innovators and entrepreneurs on a worldwide basis, give us a shout.